All right. Given all the focus on the banks and the auto industry, we thought it was worth noting that the U.S. government is not alone in taking a stake in private companies. Here's an example from Canada. In April, the Alberta Investment Management Corporation bought a stake in Precision Drilling Trust. That's the country's biggest oil and gas well driller. It's an investment that has more than paid off. So we caught up with Leo de Bever. He's the chief investment officer at AIMCO, which manages $62 billion in provincial government and public pension funds.
On a 6-month basis, as you know, that's pretty much a mug's game. I think valuations still look pretty attractive in the long run, but we still have a suspicion that we may be in a bear market rally and that this may not be straight up.
Why do you say that?
Typically, bear markets have settled at valuation levels below where we are now, and I'm not sure that this recession will last as long as some people think, but I'm not sure that current levels are justified either.
Well, having said that, where do you think are the best opportunities, investment opportunities going forward?
We think that as the economy recovers, things like materials, energy, agriculture, anything that has pricing power when demand picks up will do relatively better. And the disproportionate share of the opportunities we're looking at are concentrated in those areas.
So you're not being defensive at all. You really are getting ready, positioning yourself for the recovery.
The time to be defensive is when markets are at the top. The time to look for opportunities when they're at the bottom. And we may not pick the bottom exactly, but we're seeing lots of opportunities in almost any sector we look at, whether it's private equity or listed securities. Not quite so in infrastructure. I think it's still overpriced. But no, we don't. We have no shortage of opportunities. Credit space looks pretty good right now.
I have a lot of questions. You mentioned infrastructure. You said it seems overpriced at this point. Does that mean you've pared back some of your holdings? And if so, what specifically?
No, we're not selling anything. These things tend to be long-term holds, but it's more from the standpoint of are you going to aggressively bid for assets. There's still a bit of denial in a lot of places that people think that the assets are worth more than we think they are. So we're spending our money wisely and taking a look at a lot of opportunities before we jump.
Where in particular, in terms of infrastructure, do you think assets are overpriced?
The frenzy for U.S. toll roads, I think there hasn't been one lately, but that whole episode made me look less at that sector and more at smaller opportunities where maybe our capital has a role to play beyond just providing money. I prefer smaller infrastructure opportunities where maybe we can help structure a particular opportunity for the benefit of all the stakeholders involved.
Right.
So I don't want to be in a bidding war. That doesn't strike me as a good place to be.
Do you think the concerns being raised, be it by those investors in China, the Chinese government, and Russia, do you think they're fair, that they have good reason to raise those concerns, considering the growing U.S. deficit?
Absolutely, given that, I don't understand quantitative easing. You're buying stuff that in the next few years you have to issue a ton of. I mean, what's the logic in there? If someone has a longer-term investor and looks through that, why wouldn't you recognize at some point yields have to go up and that the only way out of the current situation, given the amount of debt that's being floated, is at least some tolerance for inflation and probably a lower U.S. dollar. So you take that combination and say, well, why would I want to be in treasuries? So I think from that point of view, foreign investors have, in fact, Canada used to have that problem when we have our fiscal problems in the 90s. But of course, we were a much smaller country. The advantage the U.S. had so far is being a reserve currency. And I think that role is maybe become a little bit more diversified than it used to be in the past.
So would you go as far as to say that the U.S. treasuries aren't as safe as they used to be?
This is an interesting question. What is a risk-free rate of return? When the debt-to-GDP ratio of a country goes up that dramatically, does it become more risky? And I think in a policy sense it does, in the sense that there's going to be a natural tendency to ease the cost of servicing that debt by being a bit more tolerant about inflation.
And that was Leo de Bever, CIO at AIMCO, talking to us from our Toronto newsroom.